Thanks. Joining us to talk more about Apple today, Dan Ives, Managing Director at Wedbush Securities, has a buy on the stock. Walter Isaacson, of course, Advisory Partner at Perella Weinberg Partners and author of Steve Jobs. Gentlemen, a happy Friday. Good to see you both. Dan, let's start with you. We watched the crowds this morning, but the more important story is the pre-order trend. Does it look good or not? I
think pre-order trend's much stronger than we expected. I think many on the street. If you look at delivery times, what's happening, not just in the U.S., but especially in China, I think this is really something where, at least right now, they're popping the champagne in Cupertino, just given what we've seen the last few years on the cycle. So thus far, I'll call it a B+, A-, where I think the street was anticipating a C.
Dan, it looks like your expectations for the iPhone launch could exceed 75 million. Is that above where you were initially or just above what the street had been expecting?
Yeah, but initially, if you look at the street, most looking at about 70 million in terms of units. Sort of seen a tick up to about 75. And I can tell you across Asia, at this point, and there are worries that you'd see a downtick. We're actually seeing an uptick. So everything we're seeing in pre-order, even in the store today, I mean, we think lines are about 70% longer in the flagship New York store than we've seen the last 2 years. So I think thus far right now, Apple continues to defy the skeptics. It all comes down to the install base. That's the golden jewel. A third of the install base has not upgraded in more than 3 years, and I think that's the key.
Of course, Walter, the longevity of your book continues to astound us because we see them now going into this new chapter on content. How much of that was embedded in the conversations you had with Jobs back then?
I think Apple has always had as part of its magic that it connects hardware, software, and content. Steve Jobs was famously interested in the content industries. He always talked a bit about music. Maybe he should have a music studio. And of course, personally, he was involved with Pixar. I do think that the challenge for Apple is to keep all three parts of that triangle together, to have the hardware, software, and content like they did with the iPod and iTunes Store. That was something I thought they would have done with Apple TV by now, but they haven't done it.
So both of you touched on something that I think is really important here. First of all is the upgrade cycle. A lot of people didn't do their last phone because they thought it was too expensive. And then all of a sudden we were talking about Apple not in terms of a growth company on the hardware side, but maybe a value stock, or maybe it's the infrastructure. Now this could be interesting because if you're talking about Apple in terms of a growth cycle on the hardware side again, people may have to look at this stock in a different way than they've been looking at.
Well, it's the 1-2 punch, because you look at right now, services, we think the valuation, if that was a standalone, 400 to 450 billion. So now you're going to start to see if iPhone units come up plus the services. I believe that's the 1-2 punch where you could see a stock making new highs over the coming months, despite the China black cloud, which continues to be a $20 to $25 overhang, in our opinion, on Apple, being the poster child of the China situation.
You know, Walter, since you brought up content before, I think we need to ask you, what do you make of Bob Iger's comments from his autobiography saying if Mr. Jobs was still alive, they might have at least explored the possibility of a combination between Disney and Apple?
I think Bob Iger's writing in the excerpt you see in Vanity Fair is just beautiful. It's about his very close and almost soulful relationship between Bob Iger and Steve Jobs, especially when it came to selling Pixar to Disney, and how Steve very openly talked about his cancer then. So I think there was a special bond between the two men. I don't think that this is something you could easily see happening now in this environment. Plus, I worry, maybe the other people on the panel don't, about going into the streaming content business and the content creation business. It seems to me that the creators, that the people having streaming content, there's a price war to buy the content and a price war to lower the price to consumers. And I'd be betting on Disney and others to win that battle, which is why Bob Iger, I think, had to make his call that he couldn't stay on the Apple board.
Well, to your point, Walter, Netflix is it's the second worst S&P today, down 6%, in part on these Reed Hastings comments about the cost. It's going to be a whole new world, as he said, in terms of cost of content, Dan.
Content's key here, and I think right now, if you look at Apple, they've built a moat, but it comes down to content. That's missing, and that's why, in our opinion, they're going to have to significantly step up content purchases, as well as we believe potentially a larger studio continues to be, from an M&A perspective, something they might need to do to accelerate into a fifth gear their content.
And you better choose wisely. I mean, look at some of these shows that are popular now. Paramount has Yellowstone. A lot of people are talking about that. AMC had Breaking Bad, Better Call Saul. So if you're going to pay up for content, you better choose wisely because consumers are getting more and more fragmented and they have more and more options.